Jacob, I heard that you almost lost over $23,000 in earnest money deposit on a new purchase. How did that happen?
I have the patience of a 3-year-old when it comes to what I want, especially when it comes to my first house. I found a house, backed a mountain, put down $10,000 for the initial earnest deposit. 4 days later, I put down another $13,433 after I picked out the wood floors and the waterfall countertops and the big tiled shower. And then I almost lost it all because rates went up. By the time that it got to foundation, my rate had basically gone up about 250%.
Yeah.
Would have had to bring more down payment to the table. I spent about 4 days trying to convince myself that I could do it, and that it just made all the sense to take a $6,000 mortgage in Santan Valley. I did not take a $6,000 mortgage in Santan Valley. I ended up buying in Mesa, but how I almost lost it was I never had conditional loan approval. If I had it, money would have been gone. But I was using the builder's lender at that point to try to get a little bit of incentive money, and they gave it back to me. But I'm curious from your end, like how as a lender would you avoid that next time around?
Like you said, you didn't have a conditional approval. That is the most important part of your loan. Basically, that means all of your documents, your income, your assets, the title work, the purchase contract, all goes to an underwriter who makes the final say. Now, you can't always do that while you're shopping, but you can get those documents to your lender before, and they can have the underwriter just kind of sift through the income and assets to make sure like, hey, everything is good to go when you do get under contract. So definitely, if you are purchasing, make sure you get everything you can over to your lender as quickly as possible so you don't run into that situation and then lose $23,000.